The amplitude of the market is pretty big right now. Do we need to get used to that? Are we going to just continue to get used to kind of this level of volatility? I appreciate the VIX has come down, but can you see more big declines and more big rallies? Is that what we're in for over the next few months?
Yeah, good morning. When we look into the mid-2025, we still continue to be constructive on the equity markets.
Okay.
So we see around low to mid-single-digit upside on S&P. Now, what is really exciting is that in the last year, we really haven't seen a lot of volatility. And we started to see that at the beginning of this month. So we are very close to our target for the end of the year on S&P. So there may be more volatility coming into the market in the next couple of months. So if I'm thinking about long term, equities are still the place to be, but there may be more volatility to come.
Talk to us then about how people are viewing the tech space here. Is this a defensive trade? Is this a short squeeze trade or even a momentum trade? How do you classify what a bid into tech means?
We continue to recommend the technology sector. We think it's one of the most exciting sectors still, and especially on the recent pullback, there are loads of interesting opportunities that we can look into. Now, the next potential catalyst for the market is some of the tech stocks reporting. So we will try to understand what is happening with the AI trade, how the demand is shaping, if it still continues to be very strong, and also what that means for the hyperscalers, the companies that continue to spend a lot of money on AI. But broadly, yes, this is one of the sectors that is a very high conviction idea from us, either on artificial intelligence or cybersecurity.
So you're looking forward to NVIDIA next week, I guess. That'll be a big line in the sand. Before we get there, we've got to talk about the bond market. The payroll number obviously caused a lot of volatility. We're seeing some revisions a little bit later on today we're going to watch out for. Then we get to Powell a little bit later on this week. The market is anticipating, certainly the bond market, if you look at what's happening with the options, that we're going to see quite a big downside. There's quite a big bid coming into the bond market over the next few months. Which is going to do better? You're an equity person. Which is going to do better? Is it going to be the bond market or is it going to be the equity market? Or how finely balanced is it going to be? Is that a kind of critical decision in terms of my portfolio?
We still see low single-digit upside for the equity market by the mid-2025. We continue to step into the market. 60-40 portfolio looks attractive for us to start stepping into the market for bonds and equities right now. To me, what is really important as to what happened in the last couple of weeks is that the market got the confirmation of the soft landing.
Right.
If you look into the data, we got 3 different data points that show that soft landing is probably the base case. CPI data was just below 3% year on year. The market liked that. The weekly jobless claims were below expectations, meaning that the labor market continues to holding. And the retail sales, which was very much watched by the market to understand how consumers are doing, was also stronger than the market expected. So to us, all of that is a perfect illustration of how soft landing looks like.
So what do you want to hear from Powell on Friday? What are the magic words?
We're trying to understand the labor market. It seems like the shift the focus is shifting from the inflation to how strong the economy has been. So for us, this has been the focus. And this is what the Fed said themselves last time, that the focus right now should be on the labor market. And that's why a lot of people in the market are trying to understand what happens with the consumers. Right?
Yep.
Yes, consumers are slowing down, but they're not falling. So that's why it's a completely normal to see a bit of a slowdown.
Is Powell going to shed any light on that, do you think?
I think it's just in general understanding how the economy is doing, right? In terms of if it's a slowing momentum and just trying to understand and link towards the cuts that we expect in September.